Hello traders, good morning. How are you doing? Welcome to our webinar, WoW Trades. This is myself, Alberto Parado. Let's begin. Well, a little bit about me before starting the webinar. As you know, for the ones familiar with the format of this webinar, I'd like to talk a little bit about myself before the formal speeches, because I have always sustained that's important that you know at least the basics of the background of the people, of the person in front of you, wanting to give you what he or she thinks relevant in the markets. My name again is Alberto Parado. I'm a self-made trader from Mexico City. I am Mexican with more than 11 years of experience. I started trading in 2005, and in the first time I started trading the markets, I lost my first live account in less than a year. But that year, in less than a month, sorry. But in that month, I realized that markets was something that I really want to develop during the rest of my life. So I dedicated myself to self-educate myself during 2 years. And in 2007, I started grasping the first results of my efforts, just to see my accounts evaporate again in 2008 due to the financial crisis. I decided to continue, but what the crisis in 2008 left me was a conclusion that what I thought it was my edge was not complete. So I decided to integrate the emotional, creative, intuitional elements to my trading, and they ended up working very well for me. That plus the traditional technical aspect using basic technical indicators like MACD, RSI, and that sort of the stuff. Plus my basics of fundamental analysis. What I mean with fundamental analysis, just to be aware of the news, to be up to date with that, knowing what number, what have influenced the price action, and what a important news delivery is, why it was important, and the influence that it could have in the future in the price action, etc. So what you're going to see here is a conclusion of all that. My social media, for the ones interested in YouTube, I have a channel. It's not necessary that you subscribe now. You will receive a recording after the webinar, so you can check it out again and then look for it calmly. You don't need to do that now. In YouTube, you search IBB Stream Room channel, and in Google Plus, if you have account, this is my account, IBB Stream Room. And for today, sorry, this was wrong. I'm just realizing that for today, April 19th, I have three basic things to talk about: geopolitics, North Korea, that I bet that you are aware of that. UK anticipated elections, that was a huge surprise for everybody. And of course, that had a huge influence in euro and pound. So we're going to check out where we are standing on, and what I call that POTUS, Donald Trump, bluffing on NAFTA withdrawal again. So let's going to see how all that and how that is going to have in what way an effect in the markets. Okay, let me start sharing my screen. Okay, first of all, we're going to focus on the euro dollar. Here is the euro dollar 1 day. And as you can see, we're standing with a rectangle pattern in the daily chart. And as you can see, even if we had yesterday this big candle to the upside, we have a lack of volume in this case. So I mean, it's complicated to really engage into this kind of conversations because when you have these three things, geopolitics, the problems with a potential war against North Korea between United States and North Korea, the potential influence that that war, if it happens, it could have with Japan and South Korea, Japan being the most one of the most evolved economies, or at least one of the most sophisticated economies in the world, and we have South Korea that, of course, is super advanced in a lot of the stuff, including technologies, etc. The disruption of the advanced industry, service, product and services industries we receive from those two countries, even if it's a normal war. Of course, we're not going to talk about a nuclear war because, of course, we would really wouldn't have an idea what could be the effect, not only economically but climately. All that, it's very difficult to try to guess why the markets are reacting this way. But the only thing that is for sure is that when we are under this kind of uncertainties, this kind of geopolitical uncertainties, the markets are tend to behave in the same way they've been behaving for the latest decades. In this case, that would mean the market entering into a risk-off mode, and that means buying dollar and selling everything else. And the exception is dollar yen, where usually the market sell the dollar and buy the yen. The problem with what we've been seeing is, of course, that Japan is very close to the potential conflict area. So in this very particular occasion, it would have been not a surprise maybe to see the dollar yen behaving in the same way, buying dollar and selling yen. But apparently, the recent price action is considering that either they don't the markets don't consider that we're going to have a major outbreak of a war in that zone, or if it happens, it's going to be a contained one. Because otherwise, maybe the markets would have it wouldn't have had sense that if the markets really believed that a war was going to happen there to start buying yen. That wouldn't make sense. So unless we see that the market starts running maybe from dollar yen and buying dollar American dollar, I mean selling yen and buying American dollar, maybe that would be a worrying signal for what could happen in that region of the world. Apparently, the markets are ruling out a major outbreak there. I mean, it would have been very difficult. It's unpredictable. The problem here is that we, besides the just strategic risks of that, having a president of the United States with such a personality like the ones like the Donald Trump's personality, and this guy stubbornly wanting to leverage onto what maybe he believes is one of his best qualities. But when you put this kind of personality in charge of the foreign policy of the United States with the power of the Army of the United States, the effect is not maybe the most desirable effect. The bottom line is this: we have still potential risks in North Korea. We have the surprise UK Prime Minister of the UK, Mrs. May, calling for anticipated elections in June. Whatever that means, because that was very surprising for everybody. We really don't know exactly what that could mean. She said general elections, but we really don't know if what could happen if that means that she's going to call for election and she's going to run again for another administration and to lead Brexit, or if she's planning to leave and leaving the responsibility on somebody else. We really don't know if the real message of this is that bottom line they realize that maybe Brexit was going to be super expensive, and this is the politically accepted way just to withdraw from Brexit. Theoretically, the markets reacted bullishly. I believe because of that, maybe because they saw the possibility that UK won't Brexit, and of course that have a bullish effect on pound and on dollar because having the in the European Union with the UK inside is just, it makes the euro stronger. Period. But the real thing is that maybe this bullishness is going to be short-lived because, again, bottom line, we have the strategic risks and never ever anticipated elections will be a good thing. Why? Because that goes outside institutionality overall. If we're talking about the UK, we're going to review that in some minutes. The pound is testing very important resistances, and again, the conclusion is this only adds more uncertainty to the geostrategic risks. So be very careful if you're really wanting under these circumstances, considering if you're considering opening short trades on dollar. That doesn't mean that you cannot find good opportunities shorting dollar and buying whatever pound, euros. But when you understand the real context that we are now, it's like depending on your personality. If you are a more conservative trader, maybe looking for opportunities to long dollar is the way to go. Of course, it's not that easy because you need to do your own analysis to find the timing, etc. If you find the timing, maybe it will be harder to find a good long opportunity for dollar. But in exchange, you will receive that if something goes wrong in the Korean Peninsula, even if that is not a major war, something, maybe somebody shooting something or North Korea deciding to test another nuclear bomb and maybe a retaliation by the United States, even if it's small, the thing is that you are like in the safest direction. That doesn't mean what I mean with safest direction is the one that represents more accurately the real risks. Maybe if this doesn't happen, if we don't have any major confusion, more confusion in North Korea, gradually we could enter in a risk on mode. But I still believe that running the risks of finding and shorting opportunities in euro in dollar is like you need to be very very experienced because you should know your real risks. We need to know that if something goes out of hand in the Korean Peninsula, the volatility could be so big and so fast that even if you are using tight stop losses, in any case, if you're using a margin account, your account can maybe it won't be able to execute the stop loss if the volatility is very high. So maybe if you're considering shorting dollar under these circumstances, trading binary options with binary.com is the best way to go if you decide to do so, because at least you will know how much you could lose no matter what. Okay, so you need to gauge all these problems and potential scenarios under this strategic risky theater. Talking about the pound, of course, again, this anticipated election thing will add another layer of uncertainty. So I really don't see why somebody would like to stubbornly look for shorting the dollar. And besides, now Donald Trump is talking again the NAFTA agreement, I don't know if he's trying to bluff, we're going to withdraw from NAFTA if major changes are not made. But the thing is that nobody really knows how that could have a negative effect or positive effect for the American economy. And so again, that is another uncertainty layer. In this case, even if that uncertainty could hit badly the United States, the markets would run to buy dollars because of the simple reason that if for some reason Donald Trump really withdraws from the NAFTA agreement, something that I really see almost impossible, but it could happen, even if that could end up hurting badly the United States economy, of course it would end up hurting even worse the worldwide economy. That is why, again, finding shorting opportunities for the dollar is like not the way to go. You can make it. You can actually trade that way if you're experienced. But if you're not that experienced, try to focus on, again, what I just said some minutes ago. The thing that really represents the current situation, including geostrategy, economy, and uncertainty in UK, is trying to find longing opportunities for the dollar. This again, this is the euro dollar one-day chart. After explaining all this, everything will make sense now. This, let me draw a trend line because it's important. What you see here, this trend line, is the one that indicated at some moment here a breakout or potential breakout to the downside or a false breakout, okay? So, let me, okay. So here, we had a retest some days ago of these levels, and the market retraced. And in fact, the market was able to make it jump above this line. So if you look this trend line that was important, at least during last week, it could see like very bullish, right? Because, oh, we had a false breakout and the market really made it above again. So maybe this was a false breakout, it's a longing opportunity. Yeah, maybe. But the thing is that if we get rid of this and we look at the alternative chart figure here, we see that we're in a rectangle. So the bullish, it doesn't look that bullish anymore. Besides, if we check where we're standing now, here, we're starting to test this resistance. But we have another aspect to check out on euro dollar. The next French elections, even when the mass media is ruling out a surprise result of a candidate that could try to go against the EU membership, let's remember that the polls got it wrong during Brexit and during American elections. So again, we still cannot rule out that risk, that at the end people end up voting for an anti-EU candidate. So again, if this is another layer of uncertainty, exactly for in this specific case of the euro dollar, I really don't see why somebody should be looking for longing this. And besides that, we're hitting a resistance. And I'm going to talk about in some minutes, we're hitting super massive resistance now in the cable. So please don't buy the lie in the mass media. Will now try to sell the hype that Brexit won't happen. The initial reaction on pound is only circumstantial. It really reacted maybe without considering further factors. Like, okay, it sounded initially like a potential opportunity for the Brexit not to happen, but it's not that easy. The thing is uncertainty. In the next months, we're again in an uncertainty stage. So North Korea, Donald Trump talking about maybe leaving NAFTA without really knowing, nobody really knowing what that could mean. So more uncertainty. We have elections in France, more uncertainty, and all that is simply obvious that unless you are super experienced, maybe you would be looking for longing, shorting USD. If not, try to look for the other way, trying to long dollar. Again, this represents more accurately the real situation in the world, geostrategically, politically, economically. So here, after having this massive movement, because as I just explained, the why euro strength got this rally after UK's prime minister saying what she said, is because euro, the euro currency, is stronger with a UK inside than if you have the UK outside. So this is the bottom line. We're going to check the 4-hour chart. It's the same rectangle. So here you can see we're just more or less in the middle of the rectangle. So considering that, yeah, the market is super optimistic and we could have like a no, how to say it, like a no-brainer longing euro dollar, that is not true. Besides what I just explained, in the dailies, in the 4 hours, we're just in the middle of a rectangle. So technically, even technically, we could expect here maybe at least an attempt to find another support, and then maybe the market could start going higher. But I see it very difficult to sustain this under these uncertainty circumstances. And besides, in euro dollar, just standing at the middle of a rectangle, it could happen, but the probabilities are low. So you need to decide if this will be one of those occasions that the market could continue going up and up with no pause. But again, the overall risks are telling us that maybe that won't happen. So you need to be very careful if you want to long this. I'm giving you this information so if you're considering maybe opening a long trading euro dollar, just to see the real risks of doing that. You could be right, but you need to be right for the right reasons and understanding the real risks. Let's go to the 1 hour. The 1 hour, it's much more significant. We have this double bottom configuration here. Okay, this is the first, this is the second bottom. So the market just made it above this reference line. So this could be the chances having here the price is that maybe technically at least this starts looking like overbought, kind of overbought. And maybe the market would try to make a retest of this line. Let me draw it. To the 106.76, etc. So yeah, maybe another thing, if you're considering longing either pound or dollar or euro, don't buy it at these levels. Wait at least for a retracement. Why I'm insisting on this? Because hours ago, just after the UK Prime Minister saying about these anticipated elections, the hype is back of, oh, maybe Brexit won't happen, so the media will start selling the hype of everything will be like before, so the pound will rally, recover all the lost territories. We don't have an idea what really this anticipated election means. We don't have an idea, and that's uncertainty, and uncertainty is reflected in euro dollar in a way, and pound dollar is reflects uncertainty in a certain way, and it's not buying dollar, it's not buying euro, it's not buying pound, it's selling them and buying dollar. Okay, so Here is like a much more tactic view. At least wait for a retracement to the 106.76 if you are considering longing this, or at least to the 107. But buying here, it's like super risky. I mean, the risk is way above average. So why should you want to do that? If you want to survive as a trader, you need to find a way precisely to circumvent this kind of trades and not getting into them without understanding the risks. Okay, so let's move on to the pound, the one that actually generated all this. Let's watch how this looks like in the daily chart. This will give you an idea. In some other webinars during after the Brexit, I said that this sell-off that happened in October, what was exactly? October the 6th. Okay. I was commenting that I was expecting this to be the bottom. I mean, like definitely the bottom of the Brexit sell-off. After that, actually, the market entered into this range-bound stuff. So this is the spike we had yesterday. But look, the volume. The volume is not representative. When you have a real movement under bigger volume, then you can consider it serious stuff. But when you have that, and besides, what you have is that a price is retesting this support zone that now is resistance, this support zone that now is resistance, this breakout zone under huge volume that now is resistance, and this reference line, this makes it a resistance zone, super high volume. Look the volumes here, and look the volume here. So considering that the pound will have the fuel to simply break this resistance zone under this volume just because of it is very difficult. I mean, the probabilities are against that kind of trade. This could be the exception, yes. But the thing is that at least you try to buy at a support, not at a resistance, because again, now the mass media is stubbornly trying to sell the hype. That maybe if you want to buy after, it's going to be too late. So you can do whatever you want. You can buy pound now. But the thing is that you really understand the risks. Because only when you understand the risks is when you can call yourself a trader. What means the risk? Well, one of the things, analyzing everything in context. All the things I said, the use strategic, for example. The potential that now Donald Trump is starting to bluff again with withdrawing from NAFTA. The UK elections, the French elections, the problems in Syria. All that is not simply supporting that it's safe at least to buy at a resistance. I mean, you need to find a best entry point, the best entry point, if you're really wanting to long this. And now, as you can see, all that I just explained, plus all this super resistance zone, is like, okay, if you want to long it, just wait for the retracement. Here, again, this is cable for our chart. This chart is pattern is a double top, or pseudo double top if you want to call it that way. And here you can see that we have a lot of volatility. Look the volume here. Yes, it looks higher, but not that higher. I mean, look at this. The highest of that volume when this volatility happened is not bigger than this, is not bigger than this. So when you have this massive supposed bullish interest, when you're hitting that massive resistance, at least you could have expected more volume. In any case that you really want to consider seriously that this could continue to the upside, like without a retracement. But everything is signaling that even if this wants to continue going higher, because in the next hours or days we have confirmation that actually this could signal a no Brexit thing, even so, we need to wait for a retracement. Okay, let me zoom out a little bit more. Sorry, I mean in the daily. Where at least where to wait for long, and if you want to long this, at least wait for the market to retest this line. This is the daily chart, the 127.40. That at least is this zone, or I could see maybe a better trading entry point for longing pound at the 127.26. That besides is a psychological level. I mean, if you have the price moving back here, then you are buying at this support, this support, this support. So it's like it makes much more sense if you want to long this. Of course, under these circumstances, until the dust settles, maybe shorting this is as risky as longing this. Of course, if hours pass and you can find shorting opportunities, well, maybe you could try to look for and maybe use a stop loss here and more or less at 129.50. A shorting, maybe the market goes back, down, maybe up, and maybe at some point you could find maybe a shorting opportunity here. No, using a stop loss above this could be more than good enough. If all this makes sense and actually the markets start factoring all this in evaluation of the pound, for example, you don't need to use a super wide stop loss. In the other hand, if you long this, if you wait for this to maybe to move this, and actually all this means that Brexit won't happen, even though your stop loss should be like here, like in 1950. So you have in a shorting opportunity, you're running lower risks. In a longing opportunity, you need to use a stop loss below this zone, unless you are super experienced and you know exactly how to detect a good and accurate stop loss point in smaller time frames. So again, these are very hard trading conditions. And besides, we have a lot of uncertainty. We just had a lot of volatility. I know that when you find that, it could be very attractive because, of course, if you say, oh, and if this could retrace in one day, yes. But the thing is the timing. Here, opening a short trade is still dangerous, but it's even more dangerous to long it. So the name of the game now is just wait. Just wait, sit on your hands. Because even if you use a short stop loss here, if the market just had a volatility spike, it could just take out your stop loss and then move back again. Okay. So just try to wait for more signals on what this anticipated elections in the UK really means. Let's move just to check the 1 hour chart, how this looks like. And again, the volume issue. Let me draw a line here. Look at this. The volumes when this breakout happened. Yeah, in the hourly chart, this looks more much higher volume. But when you compare it to this and to this and to this, we're really close to a normal, let's say, I don't know, a normal volume. So if we're now hitting a resistance, maybe if we have had the double, I mean, maybe seeing the volume here, maybe that could mean that this have real opportunities to continue moving up without a retracement, because volume is sustaining that breakout. But unless we don't see that, technically, this is poised for a retracement. When? That's the question. I insist, if you're going to long this, you don't long it here. Everything is signaling that you could expect maybe a retracement. You could say, oh, then I short it now. Well, you need to do your own analysis. Just after having this volatility, it's still risky to short. But here, the purpose of this webinar is to deliver you what I believe is the most relevant information for your decision-making process. You need to do that because it's your money, it's your risk. You need to consider the direction that you feel comfortable with and the risks you feel comfortable with. Maybe if you are missing some important pieces of information, that could at the end shaping the final result of your trades. So I approach you what I believe is the most relevant information. In any case, that you're overlooking it. Because when you have this hype in the media, at times it gets really hard for people just to say, okay, I'm not going to buy the hype, either to the upside or downside. Just think clearly. If you put all these things that I've been explaining, even if the anticipated elections gradually starts meaning a no Brexit stuff, even though we still have a lot of uncertainty around the world. French elections, North Korea, and the United States wanting maybe to withdraw from NAFTA. And either two things are going to happen if the United States withdraws. Either it will be the greatest thing that happens to the United States economy, or it will be the worst thing. Again, uncertainty. So knowing all that could help you to avoid entering into a higher than average risk trade. Let's move quickly to dollar yen. Daily chart. I believe that in the dollar yen, I will just talk about the daily chart. Why? Let me put this here, and this. Just at the moment the market started feeling comfortable under Donald Trump's administration, just exactly after the market started believing that they could invest in the United States again, in the dollar again, because maybe Donald Trump was going to moderate some views on trading, on NAFTA, on free trading agreements. That happened here. Immediately we started having a jump from the 112 up to the 115.50 level, retesting this resistance. But here we started having, if I'm not wrong, this is a post FOMC meeting minutes, or I believe this was after. Yes, it was after a Fed thing. So it was no big deal, right? It just went below this moving average. Okay. We just had a good movement to the upside, so okay. But gradually everything started going bearishly. Then we started having the North Korean conflict surging, etc. So the markets made it below to the 112. That was the reference point of this. The 112 level is super important because here is when the market sent to the world the declaration of we trust Donald Trump and the stability factor. The moment the price considered that stability factor not being there anymore, they started moving below that price, and you can confirm it here. The market broke it and then retested and immediately started moving down again. The ultimate zone for the fundamental traders, I mean, fundamentally, dollar yen is poised to the upside. Fundamentally, meaning long term. Investment type traders, investment type stuff. So very long term ones that are not retail traders, you could expect that the lower this gets, they will be buying and buying. But actually, they would love to see this going even lower because they could be buying and buying and buying. This kind of trading is not the one that interests us because we are retail traders. So understanding that the 112 level is super important, of course, not because just of this and this, it's why. Here, the market said, okay, we believe that Donald Trump, it's kind of predictable at times, and that gives certainty. And that just changed. And here we had the support becoming resistance, and the market continued moving lower. We had the 110 level as tactically the last line of support for bulls. Once this level is broken conventionally to the downside, we are not anymore in an active bullish uh, zone. We enter into a passive bullish zone for investors, not for traders. So as long as this stays below the 110, the probabilities are that this could continue going lower. We have had 1, 2, 3, 4, 5, 6, 7 days below the 110. So we can more or less consider, and we are decently far from this support. So we can consider that in any case that this manages to go up, you will find a lot of resistance, at least this resistance. And to enter into an active buying zone, we need to get above the 112. And again, when we had this Korean peninsula problem, it started arising, and Donald Trump getting very aggressive on that stuff. There was the possibility that due to the Japanese economy is very close to Korea, we could see exceptionally this instead of doing what is this usually does under circumstances like this, that is selling the dollar, buying the yen, maybe to see the opposite. But the markets were clear. They continued doing the same stuff. Selling dollar, buying yen under uncertainty. So we are below two major bullish levels. We have still a lot of uncertainty. We have geostrategic. We have political. We have economical uncertainties. Trying to long this at this level could work, but again, you need to be super experienced. These two levels are super important. In the 4-hour chart, we have another psychological level that is super important, is the 109. The market now is retesting it. We have had this timing when it retested it as a support. It didn't work as a support. Now we have a test of resistance to test it as a resistance. It's sold. Now the market is retesting it again. But look, when we had this retest, the price got up to here, but now the market is even below. And if that was not enough, we're having a channel down chartist pattern here in the 4-hour chart. So yeah, if you really know what you're doing, in dollar yen, it goes the opposite. You don't buy dollar, you sell dollar, you buy yen under these circumstances. Of course, it's not that easy, but you have to realize that from the 112, the 110 are the real active bullish levels. I mean, to really consider real chances for the dollar yen to go higher, you need to at least be able to be above the 110. So by far, considering the dollar yen, trading dollar yen is the best way to go. Either if you long it or short it, is like the one that really takes out a little bit of the risk of longing or shorting euro dollar, longing or shorting cable. Because here's like clearer. The problem was that it is close to Korea. But well, the markets for some reason are considering that that problem won't grow. Theoretically, it wouldn't be a good idea to escalate the problem in Korea because the United States knows the implications for the worldwide economy having an outbreak there because Japan provides the technological advanced stuff to the world. So having a disruption of that would cause recession. So if you balance what the United States could get from a war there and the recession we could have of a war there, it's not a good business for them. So I believe that that is what the markets are betting on. That at the end, it is better just to maybe start the United States pushing even further the North Korean leader, but not up to a point of a war. Okay. So these are the let's say most relevant things I believe. Let's just check the 1 hour. Well, the 1 hour it's really not relevant. We just have this triangle, very short one, just broken to the upside. So well, maybe we will just stick to the 4 hour chart pattern. So this, and let me stop sharing the charts. In the bottom line, and again, as I just said in the previous slide, uncertainty is the word of the game now. No matter what you see in the mass media about this UK thing, that is not more important than the overall risks. As you can see, dollar yen is telling us the bottom line of this story. It's not the euro dollar, it's not the pound dollar, it's the dollar yen. The dollar yen, due to its very unique characteristics, is telling us exactly what it thinks of this situation. So either if you decide to go long or short dollar, whatever you decide, you need to understand that if you do it now, if you short dollar now, if everything goes out of hand, you could be hurt in your accounts. That doesn't mean that it's a no-brainer thing to long dollar and you will make quick and easy money. No, that doesn't exist. You're still running risks, but at least you are in the direction of the you're reflecting much more accurately the current situation. I'm not going to lie to you. Everything can change in a snap. Maybe this rally after the UK Prime Minister calling for anticipated elections could it could seem like a relief for the markets, trying to conclude that Brexit won't happen because unconsciously, and this is something that you really need to evaluate before opening a trade. Unconsciously, the markets, the ones that take decisions, are humans, and unconsciously we are desiring and finding desperately a. Imagine if you are in the middle of the sea swimming and you have no idea where land is. No matter what kind of land you find, even if it's a small island, you will feel super happy of being and finding that very small island because you were surrounded by water, and at that point, any kind of soil would be like, oh wow, I found soil, I found a little island, even if that island is not providing you anything. I believe that this is why pound and euro rise after Prime Minister May calling elections, because we are really desperate of finding something of safety because the markets initially, when they started feeling comfortable with Donald Trump, just immediately after we started seeing that his temper was governing the speeches and all this thing about North Korea. So maybe the markets are all overestimating the real meaning of calling elections beforehand. Maybe it's not meaning that, oh my God, we just found the a safer thing to go to look at. Maybe Brexit is not going to happen. No, that you find the smallest island in the middle of the sea doesn't change anything because you still need to start swimming to find other place. I believe that this is why we have this temporary adjustment. I gave you all the data, the relevant data, the resistances, the volumes, the contextual analysis, so you can decide and not skipping this. That is very important under these circumstances. I would like to thank everybody for showing up for the webinar. It's been a while. I believe that's more than a month or something that my last webinar took place. Of course, we had holidays, etc. So this is why this webinar is getting overextended a little bit. But I really consider that this is necessary and was a must to let you know. Because I don't know what's going to happen in 1 week. It's really unforeseeable what we will see. I don't have an idea if pound will be up or down in 1 week. I don't have an idea. I only have an idea of the risks. And when the risks are higher than average, you just wait. You don't trade, you wait. And that's the bottom line of my message now. Just try to watch the price action under this framework of data that I gave you and start working on your own trading plan, either up or down. That's your decision. And expect me next week, April 26th, at the same time here, through the same. Remember that you will receive a reminder in your email, so I expect you next week. This is our webinar, WoW Trades. This is Alberto Alvarado. Be safe. See you next time. Bye-bye.